Hello, everyone. Hello, Warriors. Everyone ready to trade the NFP? Alexander, I'm fine. Thank you. Kareem, good morning. Sinatra, James Wilson, welcome to F.A.C.E. Hugo. Hello, Ann. Steve. Okay, popcorn. Everyone's ready. All right, good. All right, so this is what I want to show first to really prep you, because I do think that we're overdue for some type of correction in the S&Ps, maybe 7 to 10% coming up. So I wanted to show the VIX. Okay, we have the potential of a third drive coming if the S&Ps try and push one more time, down towards 21, not that far away. So in the next few days, you're going to have a nice 3 drive in VIX. The other feature is the yen held where it had to on this pullback. The dollar is held where it had to on this pullback. And are we going to get one more wave like this? Of course, it probably takes some number that has people concerned about rates, or maybe the Fed's pushback on their press conference from last week takes effect with this number. And then you have CPI next week. So let's see where the team's head is at. Who's around? Let's see who's around here.
Not me.
Just Blake and Stel. It's
nope. I'm not even here.
Oh, and Blake's Blake's clone.
I'm here.
His clone. Blake's clone is here, and Blake
That's
is
right.
You getting some rain? It's raining here, Blake.
We are getting some rain, but it's definitely not going to make up for the for Lake Powell almost drying up.
Oh,
but,
yeah.
But yeah, we're getting some rain.
Lake Mead, yeah, everything. All right, so what are you thinking coming in? Everyone, you're looking for, I guess the number is what, about the headline numbers 230, 240?
250 like is the expectation.
Okay.
This is down from 372 from last print. We were talking about this on the Flow Show with Steve. I think it's almost a given that employment is going to start deteriorating. The question is, will it start this month? And that's that's a difficult question, and I kind of don't think so yet. Employment, as we all know, is lagging, and it takes a few months or quarters even for what we are. The rise in inflation, the rise in costs, energy costs, the companies, the products that they're making is becoming more expensive. They can't pass on the whole thing to the consumer, so they have to be to make the companies leaner. So there's going to be layoffs, there's going to be cost cutting. But I think this is still, we could get a miss, but I don't think we're yet at the point where things are going to start getting really bad in employment. I think it's going to come, but I don't think we're there yet. So we've said before quite a few times that data really, really matters now. So we have to, it used to be the case that payrolls, whatever number came out and the market reacted to it, the week following that was usually a continuation of that move after payroll. So this is obviously not since the pandemic. This is the old normal. And
hey, and Stel, I want to mention data does matter, but what's the most important data is actually going to be next Wednesday for U.S. data, CPI.
Yes.
And I also want to mention that because we got a comment in the chat room in the ForexAnalytix chat room, that is. From Craig, he's like, he mentioned like capitulation. I'm like, I don't think today's data is that important. First of all, I don't think it's going to be that outsized. Now, any piece of data can really move the market aggressively if it's well above or below expectations. And probably one of the best, I want to say one of the best examples first time I ever witnessed this was back my oldest son, who's 18. I think he was like a year old, and it was like I want to say it was like a Philly Fed number or a Kansas City number, something like that. And, you know, it was the last piece of data that I ever thought was going to move the market. And I remember, you know, it was, I stepped away from my computer because I was like, it's Philly Fed or whatever it was. And it was so above or beyond expectations that it moved the euro like 150 pips that day. And then at that point I realized, holy crap, if the data is really, you know, above or below expectations, it can be a mover. But I don't think the non-farm payroll is going to be, you know, based on what we're seeing, you know, with, you know, there's so many other employment numbers that we see. I don't see the NFP really, you know,
What should
being
we be
too
looking for
outsized, right?
inside the number? Hourly earnings, anything inside the headline number that
Well, I think
could
everybody
be?
cares about wages. What do you think,
Yeah.
Dale? I mean, Stelios, what do you think? I mean, everybody's going to be looking at the wage component of
Yeah.
data.
I mean, I agree, and let's not forget we also get average hourly earnings today, and that is
Yeah,
that is something.
That's the part that I was
Yeah.
trying to allude
yeah.
Okay.
to.
Okay. And that's still a huge gap between inflation and earnings growth. So that's a pinch for to the consumer, the average employee and consumer. So this is very important. You know, the spread of the two.
So yeah, I agree with you, and we also have to mention that we do have Canadian employment today, so we need to take a look at
Yeah. Who
the
cares? No,
Canadian
I'm
too.
kidding.
So what do you think, Dale? How are you gonna lean into the NFP? Because I'm gonna tell you what I just did, just about an hour ago when I jumped here. Do you mind if I take
I'd
the
like
screen?
to, well,
Oh,
if the S&P
go
is
ahead.
initially rally on it, I showed the VIX chart. So if we get down to say 21-ish down
Dude,
here,
it's
it'll
a
be a
huge triangle.
third drive right here. So I'll look to short some S&Ps.
So let me since you're pulling up the VIX, I'm gonna show I want
Yeah,
to show
go
you
ahead, grab
guys.
them.
Yeah, look, I'm gonna show you something. You can talk us through this. You know, here's the VIX, right?
Yeah.
So
Oh,
I
look at, yeah.
just to be clear, this is a big triangle that we I think we posted this chart all week in the chat room, like throughout the course of the week. Really key support, right?
Yeah.
If we get to 21, which we're at 2160, but let's say we break. Well, let's just
Okay.
throw
Yeah.
this
Then
out
we
here.
could go to 18 or something.
Well, that's the thing. If we get to 21 and you're like, I'm going to short the S&P, I get what you're saying because you're like, well, you know, that means volatility is going to, you know, bounce and this doesn't mean just because we break below 21 that it's over. I mean, how many times in the markets do you see probes through key
Yeah.
levels before they reverse? So I think
Always.
I think we're at a very pivotal level, I guess you can put, you know. And look, you've been saying it, Dale, and Stelios, I think we've all been on the same page, you know, for the last few weeks. You know, hey, let the market get to 4,200. And
Yeah.
you know, this is back when we were below 4,000.
Yeah.
And so here we are, you know, and this is like kind of going right into playing right into the hand of what you've been talking about the last couple of weeks, Dale. Hey, it's going to rally into resistance. If the VIX pops below 21, you know, today, and we just kind of probe below it, you know, what's to say that, you know, we don't probe up into 4,200 and then reverse? So
Yeah. That's what I'm thinking.
yeah, I mean,
Possible.
I
I'm not
don't.
looking for a crash, but 7
Oh,
to
I am.
10%.
Oh
Are
no,
you?
we're
Okay.
going to 1,000 on the S&P
I'm
today.
figuring 39,
Just
38.
kidding. Yeah, I mean, you know, in the S&P,
Yeah.
I personally, I think we're going to be following this channel in some way, shape, or form pretty closely over the course of the next several months. I wouldn't be surprised if we
How about a right shoulder?
we do that or we do this.
Yeah, there you go.
know, something like that. You know,
Oh,
I just feel that we were going to be following loosely
okay.
this channel over the next few months.
Yeah.
That'd be my view. But what you think we're going to go to 3,800 from here?
Yeah, between here and 4,200 and then down to 39 or 38 and then up to 43, 44.
Really? So you think the
Not
market would actually
37,
break
but
higher by the end of the year?
make it symmetrical with that. The left side of the low is about 3,800. So
So
yeah,
you're looking for you're looking for a
yeah, there.
inverted head and shoulder
Yeah,
pattern development with this
yeah,
being the shoulder here, huh?
yeah,
All right. Well, for me, it's way way too early to I can't even see what happens. I have a hard time figuring out what's going to happen today versus what's going to
yeah.
happen 6 months from now. So, but I hear what you're saying. Whoops, hear what you're saying.
Possibility.
Possibility. There's a lot of possibilities out
Yeah.
there. So, Stel, how are you
Yeah.
going to trade the NFP today? What are you going to do? Actually, let me ask this, and I'm going to kind of map you guys out my plan here. What are you going to do with precious metals? What's important for you today? Because gold is actually, I didn't think we were going to break 1790. I actually thought that would cap us today, and it did, or it didn't. Excuse me. We actually are closing in on 1800. Gold's actually quite resilient at the moment. So what are your thoughts here?
Yeah. That's a good question. I think that obviously on a weak number today, gold is just going to take out those highs, and it's going to be very positive. And I agree. I thought it wouldn't break above that level, but it did. What I'm looking for is, you guys know, I've been trading silver quite well, not quite a bit, but I had my full position 1880 long. I took out a quarter at 2040. I want to reload at 1940. So what I'm hoping we might get is a strong number, so that is going to probably take risk assets lower, because the market's going to think, yes, the Fed's going to keep going, they're going to do maybe more 75s, who knows.
Yeah.
And they have been talking the hawkish talk, and this will give them the ammunition and the assurance to keep going. So I think the knee-jerk reaction will be on a strong number for metals to sell off. If we manage to get 1940 on silver, that would be great, so I can buy back my quarter and go back to a full position. I'm still very, very, very bullish these, but you know how things are. The journey can be a difficult one. And
Yeah.
the other thing we talked with Steve about on the Flow Show this morning is, what do you think happens if the data comes in line? And we kind of both agreed that, if it's not strong and it's not weak, it's kind of in line. We both agreed that the market probably just continues to grind the way it's been grinding for the past week. So stocks probably go a little bit higher. Yields are not really doing much, as the 10-year is still stuck at 270. I mean, it's amazing, right? That breakdown level, it's now the level where it's stuck for a couple of days. And
Well,
so
wouldn't you say like overshot there? You kind of got a little overshoot, and now we're
yeah,
just
I'm talking about after that low.
yeah.
We always said the breakdown level the level is 270. We broke below, we got to 252, whatever it was, and now it's come back right back to 270. So there's a huge decision to be made here by the market. It's either a false breakdown, which means we're going to 3.5%. In my opinion, or more, or the data is bad, and the Fed definitely pivots, and then we're going back down to 1.5% or 2%. So it's I think it's going to be a huge move in yields from here. I don't know which way. I still think the higher chances for yields to go higher, one more high. But with central banks changing and going on a meeting by meeting basis, they're kind of preparing us for this pivot to come. So I'm not as confident as I was before, but I still think for choice, we'll probably have one more last high in yields, and that is it.
And I just put your blog post in the chat box for everybody, so everybody has an opportunity to listen to that. Listen to that, to read it. Excuse me. You're talking about yields here, and by the way, Peter had said my microphone was a little light and I was a little quiet. I just adjusted some settings, Peter. So let me know if that works. If it works a little bit better. I had to. A couple of you guys are saying much better. I had to when I was doing a show earlier this week with Pepperstone Securities. They actually had me turn down the microphone just slightly because it was too loud on their end, and I think I didn't. Well, I know I didn't go back and adjust it. So thanks for if that ever happens, just let me know. Space it late in the day. It was like after a 15-hour day, so I was just like I totally forgot to readjust. Anyway, Stelios, thanks for the update on yields. It's going to be really interesting to watch how the bond market responds to today's data. So let's, I personally think that today's data is not going to be as weak as people are thinking. I still think that the market believes that we're going to get some weak economic data that's going to, start showing up this month, well, the month of July, and is going to, it's going to start showing that, oh, we are in a recession here in the U.S. It's really starting to take hold, and it's taking hold of the jobs data. But I don't necessarily buy into that argument just yet. I'm more of I have to see it to believe it. So I still think that the U.S. economy is pretty resilient at this point. Remember, we got all that money, all of that money flush in our economy, the last couple of years. I know it's dried up, but it doesn't mean it dries up, immediately. It doesn't. So
Blake, sorry to interrupt.
Yeah.
One more thing. I read the other day, yesterday or the day before, the previous quarter, I think it was the highest increase ever, I think, in new credit card accounts in the US. So people are loading up on credit cards too.
Yeah, and you know what? It's gonna continue to worsen. I do believe that we are going to be facing a really tough end of 2022, early 2023. I would say early, but all of 2023. I think that it is going to get worse, but the employment picture is what we're talking about today, right?
Yeah.
And did July employment show a significant weakness in job creation? Because that's what matters right now. I get all the other stuff that we can try to forecast in the next several months. What matters right now is today's jobs data. I don't know if July is going to show up as a really weak number. That doesn't mean it won't, but I don't think it is. And the reason why I say that is, and just so you guys all know, this is one of the things that I did today, is I took all of my dollar positions off. So I was long dollars, long dollar MEX, dollar Norway, short some euro yesterday. I ended up closing out a couple of losers, the euro and the dollar MEX, and a gain in the dollar Norway. Fortunately, I added to my dollar Norway yesterday pretty aggressively. So it all ended up being more of a wash. And you guys can see that in our trades room, by the way. This is our chat rooms for those of you that don't know what we do, and all the charts that we share throughout the course of the day, in the morning, and all that other stuff. But I closed all that out because I'm really just not confident I'm not confident in the fact that today's data is going to be necessarily weak, but I wasn't profitable enough, to just hold on to positions either. But what I wanted to point out is that we have the dollar, which is basically sitting on channel support. And that we have to be aware of, because if the dollar index starts breaking below 105, that to me is going to be a big deal. That's going to tell us that the top and the dollar is in. But what that also has to happen means that the euro has to break back above 103 and get towards 103.50. I'm going to ask you this, Stelios, just because you are in the Eurozone, you are European. I mean, how difficult is it for you to buy the euro right now over the dollar? Because I look at the Eurozone and I think you guys have a whole crap load of issues that you have to deal with and you're going to be facing. So I struggle to buy the euro up here from a fundamental point of view. Not saying that the euro can't go up, because if price is discovery. So if we start rallying above 103.50, it's like I have to buy it because I have to, not because I want to, because I price would suggest that it's time to do it. But how do you feel about the euro going higher?
You know what? You're absolutely right about the obstacles that Europe is facing and is going to be facing in energy, particularly. On the other hand, this is all, I think, all priced in, right? If the Ukraine situation, if the Ukraine war hadn't happened, I think the euro would have been a lot higher.
Oh, we'd be well over 110.
Yes, and
well
also
over 110.
yes, and also we have the central bank divergence, which is still there. The ECB did 50, but they spun it in a dovish way, exactly like the Bank of England did. And really, the only central bank which is still, talking the hawkish talk is the Fed. So you have this policy divergence, and you have this situation in Europe, the energy situation, which is really the difficult thing. Which is all, I think, priced in. So to answer your question, I actually wouldn't have a huge problem getting long the euro dollar. I'm not long yet, but I am definitely looking to get long, and both against the dollar and the pound for the euro, because I think a lot of this is priced in. And
well, you've consistently said that the ECB is going to have to play a little bit of catch up, and the Fed's going to eventually slow down their pace of rate hikes. So I mean that interest rate divergence will eventually play into the euro, but I just don't know if this is quite the right time, right?
Yeah, no, you're right. That's why I'm not long anyway. Amira says the euro will be 0.9 in 24 months. Yeah, I think in the medium term the euro has huge structural issues, and I really don't know if my grandkids are going to have a euro. That's the thing, or my kids are going to have a euro for a lot longer. I don't know, but
let's get back to the drachma, and we'll be all good. All right, hey, real quick, we have like 10 minutes before the data. Yeah, I'm just going to map this out really quick. What I don't know if we're going to have strong or weak data. I don't think we're going to have weak data, but I wasn't confident enough about. I didn't have enough conviction today. Again, I'll just show you guys in the chat room just to stay in dollar positions. So I closed everything out, just about an hour ago or whatever it was, and I have no problem with that. It's up. Basically, it's just all. I don't mind being flat going into this. Now, the thing about the euro is we are between this 101 and 103 range. If the data comes in weak today, I'll tell you what I am looking for. I am looking for a dip in the dollar Swiss, and I am looking to buy the dollar Swiss. I played this on the long side this week. You guys might remember I bought it down below 95 cents. I sold it at 96.30 at the 38% retracement. We overshot it, obviously. But if you don't know why I'm buying the dollar Swiss down here, technically, this is a spike high in 2021. This is a major support, which is a 618 Fibonacci retracement of this whole last major leg higher. And that is here. Now, I have to point out that if we get back below, if we start breaking below like 94.60, 94.50, then, it all reverses. Like you can't be long if it drops below that. And I don't know how many times we're gonna react off of here, but I'll tell you right now, I am a buyer on a dip down to 95 cents. So on a weak data, on a weak jobs number. Now imagine what happens here, guys. Weak data, what does that do for stocks? Dale, what does weak data do for stocks?
Higher.
Yeah. So if we have weak data, what you're going to see is the dollar in the Swissy, for example, drop, but stocks go higher, right? So if stocks go higher, what eventually moves higher as well is you get yields will probably go up, and the dollar Swiss is very sensitive to yield. So if we do have weaker data, you'll probably see a little blip lower in stocks, and then stocks start scrambling higher. Now, keep in mind on the S&P, there is a bull flag pattern here, and I delete it, as I look at longer term charts. But I just want to point out that the bull flag pattern, if you hadn't caught it already this week, it actually plays into the top of the channel and near the 200-day moving average. Just so you guys know. And so what I'm saying is that I'm looking at technical possibilities of the stock market still being able to reach for, and this is just the S&P. I'm not even talking about NASDAQ or Dow or anything else, or the Russell 2000, which, by the way, the Russell is at very critical resistance if you haven't seen it already. You know, this is the mid caps, so just keep that in mind. But you look at the S&P, we're right there. So on weak data, this is all possible. We've been talking about a move back to the 200-day moving average since 2 months ago, and you know, this summer, and here we are. It's all like laid out like it could possibly happen. However, I will say this: I don't necessarily think we're going to have weak data today. And if if you go back to the week ahead video over the weekend, I said, hey, you know, how about if the data is strong? We're going to see this pop in equities to start the week, but by the end of the week, we're going to give it all back. So if we have strong data, you know, Stelius, you were just talking about gold. You know, I mean, strong data in the U.S., it would reject gold. You know, obviously, if we get weak data, gold's going to go higher. But gold is also approaching that 618 retracement. But if we get you know, strong data, stocks should weaken. But if you look at the euro, you know, we should see the euro, you know, slip back to the lower end of the range. And I think this is the play if you get, you know, if you get stronger data today. You have to keep in mind that stocks are going to come down. The Aussie may actually probe a little bit lower, and I am looking to buy dips in the Aussie dollar, but you know, I could see the Aussie dipping back below 69 cents today. But what I would play is probably the euro lower. Now, we should probably talk a little bit about the dollar yen, because the dollar yen is one of those, it's going to be the currency of the day. It's going to be probably a pretty, you know, decent reaction based on, you know, it's either strong or weak data, and you're going to get up or down moves with the dollar. So that's, you know, and the dollar yen is probably going to reflect that pretty easily and probably pretty cleanly. So I think it's simple with the dollar yen. It's got some pretty key resistance here that is previous support here. And I want to point this out with all the yen pairs, because if you didn't see this yesterday, it was a very big deal. So you had the euro yen that rejected the breakdown point here. If you missed that, you know, it's been noted on the ForexAnalytix site for the last couple of days. So the pound yen, 618, the Aussie yen, 618, the Kiwi yen, near the 618, but also previous support, Canadian yen, 618. So if you missed all that happen yesterday, and you were trading the yen, you had to be paying attention to what's happening in other yen pairs. But that makes this very significant now, that dollar yen at these levels. So we know what key resistance is. So on strong data, if the dollar, if we have a strong, you know, NFP, and you know, and employment bucks everybody's ideas, then the dollar yen might actually challenge this resistance. If it's weak today, though, and we start getting below, you know, 132, you know, it could get ugly for the dollar yen. And keep in mind, the dollar yen's trying to peek head out of the channel here. So that's all I got for today. We've got non-farm payroll coming up in just about a minute and a half. Dale, what are you going to do here? What are your final thoughts as we go into this data?
Well, I'd like to see a surprise to the upside, get one more rally like you're pointing at with the yen and the dollar, and a pullback in metals, and the beginning of a correction in the S&P.
All right.
So
well,
I'd like to see some risk off.
You want to see some risk off with some stronger data. All right. Well, let's see.
Doesn't mean I would do it today, but it could set it up for next week or something, you know.
Yeah, no, I hear you. Yeah. So I'm gonna pull up the dollar yen, and let me put it on a different chart.
And to answer Albert's question, yes, strong data is if payrolls comes in higher than expected. Obviously not a little bit higher, it comes significantly higher. So I think any number between 230 and 270 is going to be a non-event. Anything either side of that is going to probably move the markets a little bit. My estimate is probably something like, I don't know, 280, 290. I think we're going to beat by a little bit.
Yeah, you know, I'm with you. I don't think it's going to be. I don't think it's going to be disappointing. But you know what? I'm not the best NFP caller out there. We didn't even look at the Canadian. Yeah, we didn't even look at the Canadian. And usually we do an NFP challenge but Ryan's not here. He usually facilitates that, and he's on holiday right now. And we give away, to 3 different people month-long ForexAnalytix free access. So we'll do that next month.
Okay.
For sure. Okay.
What is it?
Go. Strong
no,
data.
everything-
Dollar yen's breaking high.
528.
520.
Jesus.
Well,
Right,
What?
exactly what
Oh.
I wanted. Yeah.
There we
yeah.
There we go. Look,
I
we
don't know
didn't-
if you faded
Wow,
today.
that's huge.
Yeah, I mean,
Revision higher as well.
Yeah, I should have kept all my
Unemployment-
dollar long. So
Unemployment
yeah.
ticked
anyway.
down. Canadian
Yeah.
data missed, so I'm guessing USD CAD is going to the moon.
The dollar CAD is spiking higher.
That's not so bad.
Which is
for the
unfortunate
S&P.
because I really wanted to buy some dollar
Wow.
Swiss down here, and I just don't see that happening now. It's just a shame. Just a shame. So, yeah,
Anyway.
dollar Swiss. We're not going to be able to get. I'm not going to be able to get my price down there. Dollar Norway is breaking out. Oh man.
Average hourly earnings 5.2%, so in
Christmas.
line. So stronger than expected. It's still way below inflation.
Metals are going to go down, Tulin. They're going to drop.
And
Yeah.
Canada, there
Dropping.
should be a nice
It's-
short
it's-
coming up next week around 1:30 or so. And
the-
now
the-
you're going to get your chance to buy the Aussie 50 lower next
Yeah.
week, or maybe today.
It's so, it's such a I mean, you could see it coming a mile away. Everybody, all of the financial people and YouTubers
Darn
and all that
those
stuff.
people
They're all
like us.
oh, the so bearish on the U.S. economy and blah, 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 blah. But look, I again, I don't know if you guys realize
Fed
this.
loves this number.
The numbers that the Fed put out and the Federal Reserve put out as far as liquidity goes is multiples above quantitative easing that we saw for the last several years. So if you think that the U.S. economy is just going to roll over and die because you guys think that inflation is going to be an issue, I'm really not in that camp yet. I think it's going to be a really tough end of 2022 and definitely 2023, but we're not quite there yet. And you can see the jobs data, just kind of signals that. Now, how inflation looks is, I think a lot of people that are trying to, this is the same conversation. People are trying to think that we're going to go into some deflationary environment. I wouldn't be surprised if the jobs data beats the inflation data beats next week either, so man, look at the equity markets here. Woo, 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 so yeah, we got the S&Ps breaking down, So what are you going to do, Dale? Are you going to buy it down here?
No.
No. What are you doing, Stelios?
I have my order in at 1940.
Oh,
buy-
on silver.
Yep, to buy it
Wow.
back. The one I sold at 2040. So a nice buck if I can get that.
No, you won't get it today.
There's a
Things are
position.
set up for next week. You
Yeah.
don't
Yeah,
have to
I
react
think you guys-
today. Anyway.
No, go ahead, Dale.
It's all about what are you going to do today? Well, you know what? Today gives me plenty of ideas for next week. So, that's really it. I mean, I don't have to trade every day. No one has to trade every day. And, now just let things unfold.
Yeah, actually, you know what I'm doing, because I think this is going to weigh on equities all day long, is I'm actually adding to my Euro Aussie exposure because for those of you that don't know, I'm playing this as a cipher. I'm playing on the long side. I think we're moving back up towards 150. I don't want to be in this position forever because I think the Euro Aussie is eventually going a lot lower because I'm more of an Aussie bull than anything. But how I'm going to express Aussie near-term weakness is just buying the Euro Aussie. So I just picked up a little bit more here. Like I said, I think it's going to 150. I was on the trade-off with Chris Weston the middle of this week, and this is my play of the day for that show, and I am long personally. So I just added to that position just moments ago. So I think that we're going to see some continued risk off. And you know what you have to be really careful about is if this S&P actually breaks 40.80, that's where things get a little bit gnarly for the S&P. Hey, by the way, Dale, I know it's Friday and you typically don't have a guest. Do you have a guest today?
No.
Okay. All right. Well, then I'm going to leave you guys with a couple of things before we head out. And then Dale, any last minute ideas, and Stelios, same with you. I'm going to leave you guys with this going into this afternoon. S&P, we break 4080. Then you have to be very careful because now we're not making higher highs. We're making lower highs, and that's indicative of a bear market that we're in. And also keep in mind there's a lot of people that are bearish. So this is going to play right back into their hand. So just keep that in mind. Also with the dollar, obviously we have a very still very bullish trend here. It's hard to, like I said before, it's very, very hard to be bearish the dollar while we're above 105. But if we get below 105, that's when I start turning bearish, and I don't think we're quite there yet. So I wouldn't be surprised if we see another move up in the dollar index towards 107.70, before we reverse. Then that would probably put the euro back down towards parity, I would assume, somewhere near, below 101, because we're at 101.70 right now. It'd probably put us closer to like I would say parity, maybe slightly over parity, maybe a half cent over that. And let's take a look at volatility because Dale, you were talking about volatility. We have respected that triangle like it's nobody's business. So with volatility, if we start to rally off of this, that's going to keep that downside pressure on equities. So I just wanted to leave you guys with a little bit of that going into Friday. Dale, what are your thoughts going into Friday?
Yields maybe back to 3%.
Let's go take a look at yields.
I would also be looking to short Canada in the 130 range. Buy Aussie, same area that you're looking for next week, and look for one more flush in the euro under that 50% retracement that held this week, and maybe get long, par 77 to par 30 with stops under
I'm with you, Dale. This is exactly what kind of explaining. If the dollar index makes another probe back up to that 618, the euro should drop down towards these levels. I'm with you, and that's not something next week. We're not going to get that today. I'm not looking for
so
that
go to
today.
the beach.
Yeah, I mean today. Look,
I'm there every day, man.
Yeah, you suck. All right, Stelios, what are you doing?
I hate you now, Stel.
I know you're just talking silver. So let's go ahead and take a look at silver. What are you trying to do with silver? I'm gonna just give you my technical view really quick. If it's a bull flag pattern, it's gonna look just like this, right?
Yeah.
So where are you buying silver?
1940 is my level. That's probably a little bit higher than your
flag.
Well, let's take a look.
It's
1940 is 1958 is a 38% retracement, so 1940 is slightly below that in between fib levels. So
maybe I'll put it up a little bit.
Just one caveat before we go.
Look, I just talked Stelios into a trade. Isn't that great? Isn't that great? What are you?
And I know. Grega might say this because I've seen some wave guys. The fact that gold did what it did yesterday and made that one more extension in new highs when Grega was here, he said, so we have a 5-wave structure, which is bullish, which means buy the next break. Now you put up silver and we've only had a 3-wave structure. It failed to make that last high up there. So gold looking better. Some Ellioticians would say, silver, it was just an ABC, and that's not that bullish. So I'm just talk about the other side of the coin.
I don't like those people.
I don't really care. I don't like them either.
All right. Well. Hey,
I learned from them.
Hey, look. I want to mention this. There's a couple people that are listening in right now that were chatting earlier about the trader funding program in our chat, on our revolving chat.
Yeah.
I was talking to somebody in real life today about this week. Sorry, in real life, meaning in person. I was talking to them about the trader funding program, and the one thing I want to explain and express to all of you guys that make us different, because this is a conversation that some of you were just having on the chat, is that we don't put a time limit on you. I traded I traded prop trading for about 5 years with a large outfit. Well, small outfit, large dollar amounts, way bigger than these dollar amounts that you see here. I was always pressured at the end of the quarter, at the end of the year
yeah.
for bonuses, at the end of the quarter because I needed to make money. Like,
Yeah.
when you make money, it's like, dude, it's at the end of the quarter. If I don't make money now, I'm not going to make money for another 3 months. I did that. And what sucks about that is when you have time restraints and you have time limitations, you make poor decisions. I know that. And I did it for years. So I know how, I'd get I'd be profitable and it'd be 3 weeks before the quarter was over and I would stop trading because I'm like, well, shoot, man, I'm going to get like a, $50,000 paycheck right now. So like, why? I don't want to screw that up, So we don't put any time limits on you guys for the trader funding program. We don't say, hey, you have to pass it within 3 days or 30 days, because if you don't, you got to pay us another assessment. No, you pay an assessment and you can take as long as you want. So for those of you that were just in the chat box saying, hey, I've got some things going on, it doesn't matter. Jump in the trader funding program. As long as you place one smallest trade as you possibly can every 30 days to keep your account active. Like you can trade the smallest amount and make or lose $2. Who cares? As long as you show that it's active once every 30 days, there's no time restraints. So take advantage of the trader funding program. Trade our money. Don't risk your own. Keep 75% of the profits. It's a pretty cool deal. All right, guys. That's all I wanted to mention about that because people were talking about it in our chat on this show. So, Stelios, you got anything for anybody else?
No, I'm good. Yeah, trade carefully, and we're still in August, which is summer months, and volatility is going to be probably high, and liquidity is going to be probably low. So be extra careful.
That means you're heading back to
Till the adults get back from the Hamptons.
All right. Well, hey, Dale, thank you for always being here and having really a great week of interviews and being with us every single day. We appreciate you. So thank you so much. You have anything else for the group?
I think that being a host for the best team on the internet is really, you guys make it easy, and really appreciate the whole team and what they try and do for the public every day, every week, and the fact that you guys care about the outcomes of their journey. So makes it easier to get up at 4 a.m.
It is. It does make it a little easier, right?
Yeah.
Well,
we have a good mission, man. Good mission.
Yeah. Well, thanks everybody. Have a great weekend. Trade safe. Be careful. For those of you that are long dollars, congratulations. And enjoy.
See you on the radio, guys.
Thanks, everybody.
I don't know what that means. See you, my Trading Warrior brothers, Blake and Stel. Have
Ciao,
a good
buddy.
weekend, guys.
You too.
Adios.
You too.